and bring on and showcase our experts in here. And specifically, the goals for numbers therapy are so that everyone can understand how all of the big things fit together, make better decisions with NFTs and other investments using a balanced perspective, learn about or from some of our people in here and get different perspectives, and then also learn about different areas and opportunities that exist out there as well, and different ways of thinking. So I always give this reminder, but I just want to make sure everyone's aware. For every topic we have in here, we always have different levels of people. Some who are more experienced and some who are less experienced. And so if you're on that kind of newer, less experienced side of things, we have this guest questions thread that's in here. So at any point, anybody can ask any question in there, and I'll figure out, when to weave it in, either during or afterwards. But especially if you're newer, and especially if there's even something like a definition that you don't know, please drop the question into guest questions, because I really want to make sure that even the newer people are along for the ride all the way through, and that everyone's able to follow and learn. So. And then lastly, important note and disclaimer, none of what you hear in here is financial advice. It is all opinions. So without further ado, our dude JJP is on today. And I have a soft spot, candidly, for him, admittedly, after about a year, I don't even know, it was a year ago. During our NFT NYC scavenger hunt teamwork, we worked on some scavenger hunts together. But I've been lucky to get to know him better over the last year. And if I had to use one word from an investment standpoint to describe him, it would be methodical. To clear what we mean here, he's not, he's definitely willing to take risks and is not prude and is willing to take edges, but he's also very prudent about which edges to take, and will take periods where, he takes mental breaks to recharge, and will almost never reach for edges that are out of reach. And even if it is like even semi-questionable, we'll always have a tight stop loss on his bets as well. So he's very disciplined. He's recently also fund employed, or more specifically self-employed, voluntarily, and now entering the next phase of his life, which I know he's excited about. So please welcome JJP on, everyone. What's going on, JJP?
I'm good, doing well. How are you?
Good. Happy to have you on today, man. So first off, maybe you can tell a little bit about your background, how you got into trading in NFTs, and maybe also a little about what you were doing prior to disconnecting from the workforce recently as well.
Yeah,
Whatever
sure.
you feel comfortable.
Yeah. I guess a little bit of context. So I guess all the way back to college, I did a finance econ. Kind of always had, broad interests in, economics and finance and game theory. That was probably my favorite class in college. I did a bit of network marketing in college, which didn't work out financially, but it was kind of a minor in entrepreneurship. Definitely, I've always been kind of a maxi in whatever I'm doing, whether that's gaming or, hustling or anything like that. I definitely missed you at VCon for my scavenger hunting. I was trying to hunt down Gary V. And definitely had a good time with you in NYC, driving around or driving all over the place and everything. So yeah, kind of hustler by nature. Ended up becoming an actuarial consultant after college, which a lot of people don't even know. It's essentially like pricing out risk for most actuaries with insurance companies. I actually went the consulting route, so I did more like pension consulting, a lot of like benefit calculations, all the mathy nerdy stuff that HR people can't do themselves. Had to take a ton of exams to get credentialed and whatnot, but obviously didn't feel like I was meant to do that my whole life. So kind of started crypto in 2017, back when Bitcoin futures started. Kind of was like, I should check this out. Made some money, lost some money like most. Made a lot during 2017 bull, gave most of it back. And then, I kind of had my first, I guess I would call it breakout investment last year with this company called Aurochs that we'll talk a little more about later. And then VFriends was my first NFT. And then ever since then, I kind of went down the NFT rabbit hole and never came back. Was fortunate to kind of out earn my salary every month, pretty much since I joined MBHQ, coincidence or not, since like July, August, and quit my job end of February to go full time in the space.
Can we? I didn't know you were going to actually even talk about being an actuary. I didn't realize that you were touching that space originally. Can we just talk about that for a half a second before
Yes,
we
sir.
get into the rest? Because funny enough, like my first job that I had out of undergrad was in like the reinsurance world, and it was dealing with actuaries. And maybe just to like give everyone a bit more color on actuaries and what they do, right? Like they actuaries help scenario model, for lack of a better description, and oftentimes like use simulations to be able to do that. And it applies to like all sorts of things, but really what they're trying to do is figure out what are the various scenarios that exist for anything that's like not perfectly predictable, and as a
Right.
result of that, like price things. And is that a reasonable recap, JJ? Would you say?
Yeah, I would say, like, to sum it up in simple terms, we're professional guessers. Um, in anything actuarial, there's a million assumptions. In the pension space that I was involved in, you have, mortality. When are these people going to die? When are they going to quit? When are they going to retire? Are they going to have a spouse? Different, all these kind of assumptions we have to bake into valuing, pension plan. People retire and then start their pension. Companies have to model out like what that liability looks like. So, yeah, kind of plugging assumptions. And then, yeah, stress testing kind of is another big part of that in terms of projecting financials and things like that. Good case, bad case, and different things like that. So definitely very aware of probabilities and leverage that a lot in my trading for sure.
That's awesome. That's awesome. So okay,
Really good at
thanks for all that
Excel.
context. Sorry, what did you say?
I'm really good at Excel.
Yeah, really good at Excel, and really good also, probably a very valuable skill set, right? Is teasing apart all of the different inputs that exist, right? All the considerations that you have to have as it relates to mortality, as it relates to insurance, or for us more specifically for a project, right? And like what all the pieces that you have to put together to figure out what the outcomes are as well. It seems like it was perfect foundation for this. Yeah. So okay, so with that in mind, take us through your view of the past year plus of NFTs and how you see both the history and where we are today. Also,
Yeah, so I'll kind of speak through context. Obviously, my NFT journey. So started with VFriends. Like a lot of people, bought a bunch of Super Yetis after, and it's like there's got to be a better way to this. I'm being exit liquidity right now. I remember flipping. I pretty much like aped all my liquidity into VFriends at the time. I had a bunch of other coins staked, but I couldn't touch it. So um, I remember flipping like Punk's comics from like a for like a 2x and feeling like, yeah, that was good, and then it ran to like 14 ETH later, and I was like, oh, that probably would have been nice to hold. Yeah, I had like a grand, and I flipped some curio cards that Gary was pumping, and then Tropo Farmer mentioned MVHQ is one of his favorite communities on Twitter. So that's how I found out about it. Minted like 11 keys when it came out, and kind of started my mentality of, okay, I'm going to try and multiply this money, and through either flipping out principal and holding the rest like I did with my keys, or getting a little more creative. I took out a lot of loans last year leveraging my NFTs, including my gift goat that I still have. Loaded up on a ton of Voxies, saw the favorite projects post, and kind of went heavy into those as kind of a longer term value accumulation. Um, Good and the bad. I paper handed some of the Curia items before they are artifact from like 0.2 to 0.7. Bought back in a little bit later. And then yeah, had some pretty big wins, minting Mutant Ape Yacht Club, Rory, 888. Definitely didn't sell any of these at the top. And then one of my big conviction plays was Clonex. I'd been following them, from the early kind of, okay, these items are accessed for the mints. So I was kind of keeping a pulse on that and really felt they were doing things right in terms of social engagement, and felt like they had a kind of unique um, product offering with the physical and digital combination. And so I went pretty heavy into them to flip out, principal, pay off some loans, and kind of really set me up for this, being able to go full time this year. I feel like I have to mention what's almost become a meme now with the MBHQ whitelists. I don't whitelist grind anymore, but I sure enter every single raffle that I can. And yeah, so those MVHQ whitelists and the gift got gifts were kind of nice liquidity to start this year. Neo Tokyo and the S2s. I ran them, ran them up and then sold them and bought bytes, so ran them back, rode them back down. But yeah, I set a goal in August. If I could out earn my salary for like 6 months in a row, then I would go into this full time, and I was able to do that. But yeah, like my general pulse on the space, I guess my NFT thesis is similar to Gary Vee. I think like 98% of NFTs will go to zero. I think a lot of these projects we've seen are started by 20-something-year-old dudes who are decent enough at tech and maybe connected enough to get a little hype, but they don't have any business experience to build anything lasting. And so I really have kind of three strategies. I either will like fully flip out of something, kind of in that initial hype and volume. If it's something that I want to hold either for the utility of it or I, think it's going to be a blue chip, I will flip out my principal and hold the remaining. And then kind of my third strategy is to accumulate cash flow producing NFTs and or blue chips. So I have a pretty lean portfolio compared to a lot of people. It's mostly like access tools and NFTs. I think I still have like 8 Metaverse HQ tokens. I rent them out to buddies that are kind of onboarding to the space. I have a ton of gaming assets, kind of long-term bets in a few projects that I see doing well, and then a few blue chips.
That makes sense. That makes sense. So I think thanks for laying all that out. I think one thing that's a little bit different for you, it's not just for you, but certainly is different for you compared to, I'd say, most folks in here, is you also do spend a good amount of time on the token side of things. Like, you and I certainly in our dual or three-person conversations that we have, right? We're spending a decent amount of time talking tokens as well. So I think like an interesting question is, how do you structure everything and keep up with everything on a daily basis? Like, what tools do you use? What processes do you use? For instance, lately it's a little bit probably self-guiding. I'd have to imagine, right? But I think you and I were talking earlier. You're making a more proactive decision to focus more on tokens for obvious reasons, right? Like NFTs are a little bit cooler lately. There's not as many super hot projects, notwithstanding goblins, of course. So it's kind of a little bit self-deciding, but sometimes it's not as clear as that, right? And both tokens are moving and NFTs are moving. Like, how do you manage those processes? Like, what tools do you use? How do you manage everything?
Yeah, so kind of after seeing the NFT bear market in the month of October last year when crypto was really running, I realized that when crypto is trending up or down, NFTs typically suffer. And when crypto is consolidating, that's when NFTs thrive. So I've really tried to consciously devote my time to kind of wherever the money is flowing, whether that's in crypto or NFTs. I feel like there's always opportunities in either, but like when NFTs are hot, they're hot, and when there's less activity, it's just less opportunities to capitalize on. So yeah, I try to devote my time to wherever the money is, and having a lean portfolio definitely helps. Not having to track like a million projects. I do have a VA. If you guys don't know, the whales from MVHQ get a little VA access, so they help me keep on top of the whitelist mints. But outside of that, my NFT tools are primarily Metaverse HQ, NFT Nerds. I've got NFT Soloist for the Solana stuff too. I've used Ninja Alerts on and off for like whitelist mint timing, Alpha Sharks, and then I'm also Whale and Sniff, Nikki's internet friends too. And then one little, you guys might not know as much. There's an app called Moonflip that I use for NFT floor price monitoring. So if you want to, set a price alert and get a notification, that's something I use for that.
And that's
And
awesome. That's a
then
great. Okay.
as far as trading tools, I use Aurochs. We'll talk about that a little more detail later. I follow Benjamin Cohen, longtime YouTube guy. Mark P. Markets is actually on TradingView. I like his information, and a guy called Data Dash. I think all three of those guys have a good perspective on the market. They're pretty blunt, and they have a lot of good information. And then I also use it's called the Crypto app. It's like a $10 app you can get for price alerts on crypto. So I use that a lot of the time after I enter trades to kind of walk away and set price alerts and see what happens instead of having to constantly watch it.
That's a great layout. I think one thing that I'm kind of, in addition to the tools, like one thing I'm kind of hearing from you to some extent is, and correct me if I'm hearing this wrong and you have a different approach on it, but it kind of sounds like what you're saying is you make this like high level category specific decision depending upon the timing, right? So you'll say, based on history so far, you'll say NFTs are hot right now. 98% or even more of my time is going towards NFTs during this period because that's just what's moving right now. Or it might be the opposite where you'll say tokens are what's hot and that's where my attention is going. I assume predominantly because it takes equal amount of effort to heavily monitor either of those categories. Am I hearing that like roughly right? Where you put the vast majority of your attention into like one bucket or another, and then it comes down to which bets in there and how to focus your time?
Yeah, I think like as a generalization, that's accurate. I've definitely like as a whole, like in the last year, been more NFT focused since there's been a lot of really great NFT opportunities. But back in October and again now, I'm kind of realizing that I want to intentionally kind of carve out some time for more trading, more income producing activities, whether that's play to earn, trying to find side gigs for income, with any kind of value I can provide for the communities I'm invested in or otherwise consulting stuff. So yeah, trying to focus on a little more income producing activities and building. I know Jake mentioned that on the last talk with him too, but yeah, when things are hot, I'm just trying to kind of focus my energy on the opportunities at hand, just kind of regardless of what's going on.
Yeah, that makes complete sense. And I think yeah, Isis's question, I think, like ties in well if I'm understanding it correctly. And Isis, please like chime in or type in whatever you prefer if I don't have this right. But the question Isis is asking is about data transparency and availability for your models in the NFT and crypto space. So I think is the question you're asking Isis is like the comfort of JJ sharing his models and how he structures things in more of an open source model. Is that the question that you're asking? If you could just clarify that, I just want to make sure we have that right. Um, he's typing right now. Let's see what he says. Well, we'll come back to his question afterwards. More like
Sure.
leveraging his actual. Oh yeah, okay. So what Isis is asking is, yeah, I think it's similar to what I was saying, which is how you feel from about data transparency and availability for leveraging your actuarial skills, building models, data, things like that. So I guess it's the question of like open sourcing your models or whether you prefer to keep them tight, that kind of a question.
Yeah, it's honestly like I really I leverage Excel for tracking predominantly, like tracking my trades and things like that, and kind of keeping organized. Even like I was selling a lot of projects earlier this year, and I would have trackers about, okay, like this is a project I want to exit. Maybe this is an upcoming catalyst I'm looking forward to maybe sell into, things like that. But I really don't use any super complex models. It's more, I would say the complexity comes from like the thought process and conversations I have with people about the strategy, and making sure that we're setting ourselves up to have success with whatever investment it is. And so yeah, I don't I don't use any crazy complex models. I think a lot of that's just like in my brain, kind of thinking through things, which unfortunately I can't outsource as easily.
So there's no proprietary JJ tools coming out anytime soon. We won't be minting the JJ NFT. That sounds like that's not happening anytime.
Nothing yet. Maybe later.
Okay, got it. So, I mean, maybe it's a pretty good segue into taking a real hard and fact example. And I know this is you mentioned it already on here. I know you and I have talked about it a bunch, but let's talk about Orops for a second. I know you like this bet. How did you find it? What did you like about it? What did you continue to like about it? Did your perception or perspective in terms of scenarios adjust as it went on over time in either direction? You want to talk us through that?
Yeah, sure. So I guess a little context is that I haven't probably showed it to a lot of people in here. So Orox is a Web3 company that initially started out with a free kind of trading view
I picked up
terminal.
the phone to call you today, and I was like,
It's just getorox.com. They have some proprietary indicators that are about 70% accurate on like daily and weekly time frames. So that's kind of helpful for another information point on kind of broad, I guess, directional bias of the markets. It's definitely not 100%, but a lot better than nothing. And I've been kind of trading since 2017, off and on. So I was in a crypto coin trader Facebook group, got an ad for them like December of 2020. Kind of did a bit of a deep dive. Really liked kind of their position in the market to try and not only kind of simplify trading for people, but now they're kind of trying to become a thought leader in terms of like simplifying the space as a whole to help people on board. They're coming out with their own non-custodial wallet that's gonna, eliminate a lot of the pain that we have now with, cross chain trading without, having to deal with gas fees and another coin, and a lot of the security issues with seed phrases and wallet addresses that confuse people. Like the average user isn't really like designed to remember a 12 word seed phrase. So security questions, just kind of common sense things to eliminate a lot of the onboarding errors. They were all, self-funded. And yeah, so I did a deep dive with them. Lost a lot of seat February of 2021 leading up to their IDO because I was really excited and saw the kind of potential. Did really well with the IDO for not having a whole lot of bots. It was the first time I'd used Uniswap, and I was practicing like crazy on my phone. um, but yeah, I staked most of that. I was like, this is kind of a picks and shovels play. It's going to take them a while to build these things out, but I like the people behind it. I like the product and what they stand for, and so I, made a pretty big bet there to stake a lot. I recouped my principal, leveraged some of it to buy a house last year. So I'm, already in profits, but staked it long term, and got a bunch of friends and family, and so that was really cool. Being able to, send a bunch of buddies some money last year too.
Can you, JJ, can you also just like overlay timing on that if you can remember back, even if it's just rough? Like, what was the original timing where you heard about it? When did you invest? How long
Yeah,
did it
so
take to, can you just lay timing on it?
yeah, December 2020 was when I heard about it. End of February 2021 was the IDO. And so it's been a little over a year since then. I was kind of like an unofficial mod in their Discord for a while, so it's like I get kind of noticed for a bit, but it's been really cool to kind of reconnect with them more recently since going full time. Trying to help kind of give back to that community and pump my own investment from providing value in any ways I can, helping them with kind of some NFT consulting with their wallet and some technical writing on their infrastructure, things like that.
And so, what was your lens going in when you first heard about them originally? Right? Was the lens that you had on whether I invest or not invest is I'm going to default to a no until they convince me otherwise, and then over time you got to know them better. Like, what was your like emotional perspective there in terms of convincing yourself to invest?
With that one, I really developed a lot of conviction through my own personal research, deep dive in their white paper, their projects, kind of being involved in the community and seeing how they handled stressful community situations. There was just a lot of checks, I guess, self-funded. I feel like a lot of this is kind of like VC evaluation for a lot of these small caps and things like that. And it's, do you have trust that this team, they already had successful businesses, so they had a proven track record, they had the funding, kind of they had the right moral compass, I guess, and they were they already had a working product, which is kind of novel in this space. So there's a lot of things that aligned to that. I kept just kind of doing some research, asking questions, plugging in, and I've ended up kind of developing my own conviction for them.
Yeah, the definition of MVP has changed in Web3 in
Yeah.
terms of what's needed. So, I mean, maybe we could just give off of that. Like, okay, so you had the conviction, you were excited, you were going into it. Obviously, it was an investment, right? Like, very, very clear. This was not a flip. It didn't even exist as a flip
Right.
possibility given the timing that existed, right?
I did flip out
Uh,
principal.
yeah, yeah, that counts. But even that took, like you said, a couple months, right? I think, plus or
That
minus.
was about like 7 days.
Oh, yeah, that's not bad.
That
Okay.
was pretty quick.
Um, But in terms of when you were convinced originally, like just at a high level, like what were the scenarios that you saw as possible outcomes of this investment? And like just give like a rough weighing, let's say, of the scenarios too, if you can.
Yeah, I mean, like I think with any promising investment, you hope to get in at a good price. So I had kind of like, if I can get under, this price, I'd be happy with that. I had like some pretty conservative price targets for market caps and things like that. Just kind of assessing competitors and what I thought could be reasonable. But yeah, I've always kind of had the thesis like they're listing this at a really attractive point and long term. As long as they keep building, I'm gonna keep holding. And unless something like I think key person risk is the biggest risk for a lot of these companies. If like the main guy something happens to them, that's maybe not great. But otherwise, as long as regardless of what the market's doing, as long as they keep building, I'm pretty bullish on them.
Okay, that makes sense. And I assume also, I mean, just pragmatically, as bullish as you were on them, there was a negative outcome that existed too, probably, right? Where, maybe they did things right, but the market shifted, or maybe there's the key person risk and something happened to the key person. So there were those scenarios also, I assume, right? Even if not high probability.
Yeah, I mean it's hard for any company to time the market perfectly. They listed on KuCoin like kind of that last alt rally, and it went up to like the coin went up to like 150 briefly, and now it's like $30. So, like, obviously not what you hope going into a listing, but at least it's available now that people can use it.
Yeah, that makes sense. So let's maybe contrast this a little bit, right? So Orox worked quite well, right? And it was kind of like your expected scenario plus or minus panned out and you recoup principal and all was kind of good, right? But I think another scenario, another investment that didn't quite pan that way, unfortunately, so far at least, has been Voxies, right? And I'm a little less concerned about the outcome of it, right? Because we've all been a little bit hit with like the shrapnel of P to E and not working out right. I'm a little less concerned about that. I'm more concerned with like what your thought process was on Voxies and what the scenarios you were and what you kind of saw, and equally what your plan was as a result of that, right? Like if something went well or didn't go well, like what your plan was up front. You could talk through that.
Yeah, no, Voxius has been a really good, I guess, learning lesson for me. I went into Play to Earn as kind of the hope of income generation. Obviously, last fall, I was kind of my goal was to be able to quit, and I was looking for different streams of income to kind of stay afloat, regardless of market conditions. After doing that, and so Play to Earn, having the promise of being able to buy these assets, rent them out, other people play, and you get a piece of that was really attractive to me. And I saw Voxies as really experienced AAA, some guys with a ton of experience and connections. I've definitely realized now that I don't know, Play to Earn, especially like I guess the valuation thesis on it has become less of kind of a moonshot mentality for me to more conservatively like, yeah, it would have been great to take some profits during the several kind of pumps throughout time. So I think I did. It wasn't like a failed investment. I've already recouped my principal through the token allocations we got, and I kind of use that to get my principal back. So still holding a bunch. Got about 60 of them for, I guess, maybe not free post tax, but pretty decently. And yeah, I'm still hopeful that they figure things out. They're still building. It's taking a lot of time to work out bugs and things, but yeah, as long as Play to Earn takes to build out, it's definitely like it's a long term investment, like multi month, for a lot of these, and so you have to make sure to kind of realize that with the liquidity that's being invested, and make sure it's not principal that you need like tomorrow. But yeah, I still like have hope for Play to Earn. I think um, there's a lot of companies that are going to try. There's a lot of things that are kind of going to come and go. I think it's a cool opportunity to have some fun, maybe generate a few, some part-time jobs for people, even if it's only for a short time, kind of as everything's learning it. And then I'm obviously hoping to hit, one or two that do actually stick around for a while and, do end up being really fruitful down the road. But yeah, it's definitely become more of like a, I don't know, VC type investment for me in terms of risk reward. Like hopeful to get principal back for a lot of these from one way or another, but also like okay that if one or two of these really doesn't pan out, hopefully some others do to kind of make up for it.
Yeah, so I think that's a great great walkthrough on how you're thinking about that. And I think what's also interesting to maybe call out about that, and I think we've all kind of experienced it with like every one of us has experienced this with some kind of investment. But like what's interesting about this example, right, is like the layers of risk that I think exist here, right? So like layer number one, of course, is like PDE in general, which we all thought was kind of foolproof to some extent. And even though we didn't think we necessarily knew exactly who the winner was going to be or winners, we thought PDE was steadfast, and yet it wasn't, right? Because bigger macroeconomic issues with conflict as it relates to traditional gamers versus NFT investors, and that like several layers of things that like didn't happen. And then below that, that's only the top level, right? Below that was like the Voxies team, and are the Voxies team are the Voxies team actually going to perform? And then below that is even if they do perform, are the tokenomics set up correctly, and is the supply demand set up correctly, and all. So I guess the point of saying this is like as perfect as your approach and thesis was, I think, right? There's like always these like several layers of risk that exist. And as you start to like multiply out each of those elements of risk, you just get very quickly to a high probability that any given project is not going to be successful, possibly.
It doesn't mean you can't still make money from it, though. I think it's helpful to kind of analyze the roadmaps on these projects. Like when we were, I think you got Mavi as well, right? The Clash of
Yeah.
Clans type, kind of talking through what would potential catalysts look like. Of course, they kicked their token integration from Q2 to Q4, and that was kind of crushing. Hoping to get principal back and get a, kick that down the road a little longer. But I think it's with any investment, I think it's really good to like think through what are the catalysts that like are known that I can kind of keep in my mind for maybe taking some profits or trying to kind of position myself ahead of. I think that's just like a smart thing to do, whether it's play to earn or anything else.
Yeah. So I think one question that would be also interesting, because they're just a little bit, of course, structurally different, right? Is if you can talk to like, how do you think about targets or a stop loss for an NFT versus a token, right? And this could be like partly how you think about it. It could be partly like even technologically and process wise, because you could put limit orders on tokens and you, of course, can't yet do that in NFTs. Like, how do you think about those two in terms of like your plan up front?
Yeah, so it's definitely a different mindset because NFTs typically have this price history. So you're kind of, trading off, I guess the 1 minute charts would be the equivalent for crypto. I have found a good bit of success trading secondary, buying at like support levels, seeing where prices have bounced previously on NFT nerds or something like that, and buying back if it, revisits those levels has done well for me. But I think, I don't know, I've probably generally set like 10% ish stop losses for NFTs. I took a loss with other sides or the other deeds, but I had like 10% stop loss, so my losses were pretty limited. And I was like, okay, like it didn't bounce, and take my losses and move on to the next thing. But yeah, crypto trades. I guess since there is a little more price history, it's easier in my opinion to like look for supports and resistance levels. Where has price reacted in the past, both with price action and also like I use like fib retracements, technical analysis stuff you can look up. But basically just looking for like where is price likely to react in terms of both like buying with buyers, selling with sellers, and taking profits along the way. But I also try to look for trades like in terms of coins with at least like 2-to-1 risk to reward. So, maybe I'm taking a Bitcoin trade or ApeCoin trade, and, I've, setting my risk at a certain level, because I see, potential price target that's 2 times that or 3 times that. And the whole point of that is like, if you're trading over time, like even if you only hit 50% of your trades, if you have a good risk to reward, you'll come out with profits like in the long run. So I think it's really important to be diligent, both with the opportunities you take, and also kind of where and when you take them, and just taking profits along the way.
Yeah. Just the equivalent for that, by the way, right, is like, in case anybody's not to TA, a risk reward, whatever. Like, I think the equivalent for that, if you have to like parallel it to a business that you were going to go into, right, is margin, right? Unit economics and margin. Just making sure you have way enough margin so that if anything goes wrong with your business, your products, whatever, you have more than enough upside to be able to capture it. And I think it's like pretty parallel to TA here, I would say. But JJ, you did mention about the dip buys, right, and support levels. I think that hits one of Scott Coe's questions. What about the momentum side of things? So let's just say a project's starting to move. Let's just say Goblins is starting to move, as an example, right? I mean, just to give a recent example that exists. At what point are you like, maybe I should, jump on this bandwagon? I think this thing may continue to move. Do you only jump in on pullbacks that come back to support levels? And therefore you won't enter it unless it does pull back to certain support levels? Like, how do you think about that?
I would say this is one of the areas that I'm actually more conservative than most people. I really like intentionally try not to chase things. Even if, they continue to pump and continue to pump and continue to pump, there's a lot of people that are already well in profits, and you run a risk of being their exit liquidity. And I guess also just like as a product of like the number of opportunities that there are in this place, like there will always be another opportunity. So I don't know, just like as a product of doing this for a while and just trying to increase my probabilities. Like I really try not to chase things unless it's something that I really want. Like I don't know, and yeah, buying pullbacks is obviously an attractive time too. If there's a project I really want to get into for long term, then if I can wait for a pullback or something, great. But otherwise, like in the short term, I really try not to chase things. Obviously, it causes me to miss things, but probably more than not, it causes me to not be exit liquidity, which is super important.
And just real tactically, Scott also asked, what was the name of the app that you used for floor alerts? If you can repeat it.
Moon flip. So it's like a
Moon.
little picture of the moon with a rocket. I can try and link it after.
Cool. So thinking about like the current state of NFTs and near-term bets, and how are you thinking about near-term bets? How are you planning for the midterm plus? Like where's your head at right now?
Kind of like, where are we heading in the market?
Yeah, where are we heading in the market? And then as a result of that, like how are you planning to use your chips as a result of that? Are you holding off for now? Are you investing into certain things? Like how are you thinking in general?
Yeah, so pretty much ever since the bears kind of really kicked off, the NFT bear, I guess this month really, April was insane. Like there were so many opportunities. We kind of had a blow off top, I guess you could say, in the NFT space. I've kind of taken a break, went into stables, paid my taxes, and kind of been taking a mental break to kind of get reset. I went to VCon last week, which was a really cool experience, very energizing. And kind of optimistic. Like I definitely think that we could see an extended bear market both in crypto and NFTs. I think degens are degens. There's always going to be money chasing something. So I think there will still be like opportunities if you're paying attention. There's just probably going to be fewer of them, and you need to be a little smarter with when you like ape in and how much, and more quick to take profits in this environment. But I guess like my thesis on uh, where we're going in the space long term, I don't know. I think like blue chips and like social proof of NFTs is here to stay, especially being at VCon and people talking about, well, what do you have? What do you have? Having a way to, digital recognition in real life is definitely here to stay in one way or another. So I definitely think there's going to be, the PFP, blue chips, I think are likely to stick around. I'm not sure how long kind of the airdrop meta will last. A lot of projects are providing value just through airdrops, but if the demand dries up for those, it can go bad. A lot of you guys will remember, like last fall, there was a while where there was a lot of art projects that even including 888 that would airdrop art, and if you don't have the demand to meet it, it totally devalues the project. So I'm not sure how long kind of that airdrop meta is going to last. People buying up these different things that drop from different projects, but I think the innovation and like I think Artifact's perfectly positioned, like physical and digital is like keeping it interesting and innovating in that space. I definitely think is something that's here to last. But yeah, if companies don't have like a well thought out long game, I guess I'm not sure how long the communities are going to value these airdrops if they're just kind of fun little things here and there.
And what is JJ? What does that mean specifically for you and your chips and ammo in the near term? Does that mean a smaller portion of your stack that you'll put towards anything? Does it mean just way tighter stop losses and needs even more imbalanced risk reward is needed than normal, possibly because it's a little bit a little bit trickier these days? Like, what does that mean specifically?
I guess like I'm taking fewer investments. I'm being more picky. I'm taking profits sooner. I mentioned I'm focusing a little bit more on trading right now than NFTs. That's kind of there's always volatility to capture one way or another. But I feel pretty comfortable with the NFTs I have. You know, cash flow producing and/or blue chips, or tools and access that people are going to need long term. So I'm not, particularly worried about what I'm holding or not. But yeah, I think it's a good time to be disciplined. It's a good time to build both, and network with people that things that you want to get involved in the space, it's a really good time to network with people when there's less frenzy and they're getting hit up by less people. So it's a good time to kind of think of all kinds of different activities that you could do for both income producing and kind of building your ML in the space.
Very cool. Very cool. That was awesome, man. I really appreciate your rundown. We'll just take a pause here for a minute or two. If anybody has any question, I know JJ had a lot of stuff today and gave us a lot of really good detail in terms of how he thinks about things and literally tactically what tools he uses, all those good things. If anybody has any questions, like please drop them into guest questions. If you want to, come on and say something and have a question, whatever actually works for you. I just want to give a brief pause to make sure anybody can get anything answered that they want. And, needless to say, we're an MVHQ anyway, right? So if there's a question, of course, for JJ, I'm sure he'd be happy to answer it anyway. We're not going anywhere. But if anybody has any immediate questions, please drop them in or say something. My sense is, JJ, that you've just thoroughly exhausted everything and you just gave so much information that there's not many questions left. I think Godwin's typing something right now. So Godwin asks, do you think the play at the moment is NFTs over coins as the market is ranging? So I guess the question here is, right, is we've all had this observation that when the market ranges, that it's usually better for NFTs, like you kind of suggested as well. As a result of that, do you think the play right now is NFTs, or where's your head at?
A lot of people that I've been following are kind of pushing the idea of a little bit of a relief rally, both in kind of all markets in these next few weeks in June. So I'm trying to position back into a little bit of ETH. We'll see what the FOMC does. I might take a stop loss, but hoping to see maybe a rebound up to like 35 to 40K in June. That's kind of my, bias right now, which would be a trending environment that NFTs might not. They might go up in dollar value, but the ETH values might not, do as much if people are chasing, coins and things instead. So if that plays out, I think coins are likely to be where the money's going to flow in the next few weeks. But yeah, if we continue to just consolidate and crypto, the coins are super boring. Like, and people are going to look for NFTs for different things.
Yeah, that makes sense. When did Relic change his username to FBI? I don't even know when he did that. Good. I think other than Relic's question of making sure you did your taxes accurately, I think that's all we got for today. So I think maybe we'll use this as a chance to just break. And, of course, if anybody has any questions, follow-up questions or otherwise, feel free to reach out to myself, JJ, whoever else would be useful.
A little bit on mental health, since it's
Mental
health awareness month. I just think it's really important, given we got a few more minutes. I just want to say I'm a huge proponent of going to therapy, given the levels of anxiety that come with this profession. If you have an employer right now, I definitely ran looking up to see if they have an EAP. It's an employee assistance program. I basically was able to get like therapy for free from my previous employer, and it was really interesting talking to them about what I'm doing, but it was super helpful to have someone to kind of talk through how to manage anxiety and maybe spells of minor depression and how to cope with different things. I think it's really beneficial to talk to a professional about that. And then outside of that, like just realizing that you don't have to crush everything. Good enough is like perfect as a trader. Like you're not gonna crush every entry, every exit, every idea. But as long as you do good enough, like you should win in the long term. And then just realizing that other people's successes like doesn't define your worth. Cheer on your buddies. Like I get more pumps when my buddies win than I do. And then on the diligent side, like track your trades and take notes about why they turned out good or bad, and like it'll hopefully take away a little bit of the emotional side of it. It's been really helpful for me to like zoom out. You might feel bad in the moment after taking a loss or something like that, but more than likely, if you've been in this community, you've probably crushed it like over the long term. And so taking time to zoom out and really like, okay, like I really have done well. But yeah, you're going to consistently miss opportunities and fail in executions. So I think it's really important to actively take care of your mental health. And we've got a chat in MBHQ. Make sure to reach out to people as needed. But I think it's really important to kind of make sure not to let that go unaddressed for too long.
Yeah, that's a great point, and I appreciate you you bringing that up also, and I think just the nature of what we do here in general, right? The fact that even though we're all working together or discussing things together, right? We're all our own business basically, right? We're all running our own quote unquote business, and so as a
Yeah.
result, you're alone. You know, if it's this, or even if you're building a project to some extent, you're alone, and I've seen it from a, this perspective, like you're saying, but also a different perspective of just solopreneurs and entrepreneurs in general, and being alone, which is not easy, needless to say. So I'm really appreciative that you brought that up as well, JJ.
Yeah,
Thanks, man.
absolutely.
Um, okay, so with that note, very much appreciate you coming on, JJ. Very much appreciate how much you pulled back the curtain, and certainly your ending thoughts as well. And thanks everyone for joining, like always. And next week we'll be on at our normal time. I would say that's 12 Eastern, 9 Pacific on Thursday. And we'll of course have something interesting going on like usual. So same time next week. And one last comment that I'll say as well is we do have the forum, but also if anybody has recommendations, not just for topics that they want to hear about, which we'll of course always listen to, but also has someone that they would recommend that they come on and speak about a specific topic. The kinds of things that we've lined up in the future are everything from a bit more trading to I want to have a conversation on metaverses specifically, and not so much from more from the macro level of what's the current state of metaverses from people on the front lines, and as a result of that, being able to analyze what outcomes exist for metaverses, because I think that's a pretty important input to all the bets that we're making. And I feel like, at least myself, I don't have a perfect view on that, and I'm not sure most of us do, frankly. So I'd love to have that. So there's some other really cool conversations up, but if anybody has any other thoughts of conversations that you want to hear about or topics, or someone that you think would just be awesome to come on and has certain expertise, please just drop me a line, drop Poop a line, whoever else. We just want to make sure it's consistently really valuable for everyone. So with that said, thanks everyone for joining. Appreciate it.